So, hello guys and girls, welcome back. My name is Hosanna from Chikodo Trading Academy, and I'm happy to bring you another update on Bitcoin. Now, a lot of my analysis on Bitcoin in the past have caused some sort of commotion here on Facebook. I've had people call me names. I've had people not receive them well and all that, but it's all good and fine. We are traders and we're what we do. Now, looking at the price of Bitcoin most recently, you can clearly see one thing: we are bearish. Doesn't matter what you think, doesn't matter how you feel. Your optimism doesn't mean anything. The market is bearish simply means the market is bearish. Now, looking at most recent price action, I want you to quickly observe some characteristics here in the market. Of course, you can see what I have written here: smart money invasion, meaning that I'm expecting smart money, which is the banks, the retail, the big boys that really move this market. I'm expecting them to draw the price of Bitcoin all the way down to 28.17. That's $2,817 per Bitcoin in the future. Now, I want you to quickly take your mind to study something. I want to show you something here on the price of Bitcoin. Now, look at the impulses that we have had in recent times. Looking at these impulses, we have this impulse and this corrective leg in price. We have this impulse and this corrective leg. Now, this most recent impulse, and this is the corrective leg. I want you to just take a look at it and study it based on what your natural eyes can see. You can see the length of this impulse followed by this correction, and then the length of the following correction, and the length of the succeeding correction. Now, these corrections are reducing in length, and simply the consolidation is equally increasing. So this tells you that the price of Bitcoin is actually slowing down a little bit and steadying up around these 20,000 levels that we found ourselves. However, there is a catch somewhere. Now, looking at this most recent price action you have in front of you, we have this impulse, very quick correction. Now we have a long impulse, and then this correction here. Now we've broken out impulsively, and then of course we have quickly followed through with another correction. Meanwhile, when we broke out of this particular move here, there was no follow-up correction before dropping down. So this is telling you that there's a lot of interest, there's a lot of buying interest around these 20,000 areas. And what does that tell you? When there's a lot of buying interest from people, from institutions, from retail traders, from whoever, wherever, it gives smart money an opportunity to actually run the market to the downside and run the market against these guys. So what do I mean by that? If we quickly look at 17,000, if you notice, I have this line here drawn at $17,572,000. You see that we had this line here, and then the next price action that we saw came in and just paused at this level. Just look at how this price just paused at this level, and then we began the retracement. It tells you one thing for sure, that smart money is definitely going to run this low. This is equal lows, and there is too much attractive liquidity for them to ignore. And if you really look back in price, this is just retail support and resistance. And a lot of retail support and resistance, what happens to it most of the time? It gets run through. It's retail support and resistance. There is going to be a whole lot of buying interest around these areas. A lot of it, I'm telling you. So if we have a lot of these buying interest around these areas, it makes sense for smart money to come for their soup here. They're going to definitely come here and raid these areas. And how are they going to do that? They're going to run price right down to 17,500. Now, looking at what we are seeing here, some of the short characteristics that I just mentioned, the length of these corrections, the length of the impulses are reducing, and then of course the consolidation and corrections are expanding. It's telling you that after we run this low, there's a good chance that we could start some recovery, some short-term recovery to the upside before we eventually blow through to the downside. Because are we going to blow through to the downside? Surely, as the Lord liveth, we are going to blow through to the downside. But at the moment, this is what we have in front of us. There's a very solid chance we could trade into these areas, at least trade into the discount and premium pricing, raid these areas, start a short-term recovery. And of course, the short-term recovery is going to actually pull a lot of people into the market thinking that, yes, whatever it is that happened before is not going to happen again. And this time around, we are bearish forever. We're going to be bullish forever. But really, that's not how these markets work. So not to be a prophet of doom, or not to sound like someone who doesn't want to see the progress of Bitcoin or the people who trade Bitcoin, but this is actually the facts that we have in front of us, using impulse and corrective waves and smart money concepts to look at the market and just bring you updates. So I hope you enjoy your trading day. I hope you enjoy your day, whatever you're up to. I hope you're having a good time. And just be safe, trade properly, trade wisely, and manage your money. Don't trade with money you can't afford to lose. Of course, don't take whatever I say here as financial advice. I'm not a financial advisor. This is just for entertainment purposes. This is just me giving you what I think might happen. The market doesn't have to obey me. The market doesn't have to do what I say, but this is just my opinion. So enjoy your day, guys. Have a wonderful day. Bye-bye.